And welcome to the weekly review. In this particular video, I'm going to go over just about actually three pairs that have been looking pretty interesting. Two of them are USD pairs, but one of them is a Euro JPY. I'm also going to jump in on oil because of what I've seen in the long term. Currently, I'm highlighting NASDAQ. I was just going over this chart. And if you guys have seen my previous videos before, this is incredibly messy, but there's a reason for that, right? I marked up NASDAQ for about the last 3 years, and simply what this means is every blue line means that there is a gap that was closed eventually, an orange line means that there was a gap that closed within the week, and green means that the gap closed the next day. What I mean by that specifically is, since NASDAQ is an indices that can be traded on Forex, it's not the same as the IXIC that is on stocks, right? So it's technically a Forex traded indices. Okay, so what happens is when the stock market closes, NASDAQ is still able to be traded. Okay, people are still able to take buys and sells whenever they want on this. It's open 23 hours a day. Right? It only closes between 5 and 6 p.m. Eastern Time. So what ends up happening is that in these boxes that you see, it's still being traded, right, when the stock market is closed. That's why you sometimes see a lot of stocks either open higher than when they closed the previous day, or they open lower. It's not necessarily to say that retail traders are doing a lot of aftermarket trades, right? It also involves a lot of indice movements. So anyway, anything within the box is after hours. Anything outside of the box means that it is a normal trading session. So I want to give you a little bit of information, right? When I set this test up, I wanted to see how many times the gaps close within the day. Okay, and that's approximately 70%. It's a little bit less now. I would say like 69.2. Okay. That plus the orange, meaning that it closes within a week, it's about 82%. Okay, so if you're taking trades based just on that, look at it this way. If you take a buy or sell on the NASDAQ indices, there is an 82% chance that it is going to close that gap before other movements are made. Okay, so blue means that the gap eventually closed, didn't close right away. All right. Actually, this one closed way over here. I just saw that, so I'll shift that over to an orange, right? Because that's less than a week. So yeah, that is exactly what I've encountered. So whenever the market opens and I see that there's a big gap to be closed off, I would say 4 out of 5 times I'll be right. It's just how it's going to go, and it's much easier than taking any sort of crazy indicators or strategies. It's quite simple statistics. 82% of the time, it closes within the week. Just a little under 70% of the time, it closes the next day, right? So 7 out of 10, let's say. If you take your trade based on where it is that current day, there's a 70% chance you're going to win your trade very easily. Okay, so yeah, that's just how it goes there. Just wanted to share a little bit of fun information for that. Right, so I'm going to jump on oil right now. Let me explain to you what I've done here. So in the long term, this is what I see. Okay, I drew a fib from that last lowest point that we had at the beginning of December 2021 to the highest point that we hit March 8th of this year. Okay, so I just did my fib retracement, and now what we just had happen 2 days ago is this gigantic wick bounced off an institutional candle that was set up at about February 18th, okay, and within that golden zone on the Fibonacci. So that institutional candle is a 4-hour candle that's in here within that day. I zipped that all the way across, and as you can see, I'll just switch it to the 4-hour here. Look how that triggered. It just touched that line and it formed another institutional play. All right. So my trade idea for this is to be able to take a position off of here, because I see oil going up very, very high in the near future. Now, not necessarily to say I need to take like 2,500 pip stop loss here, or $2.50, I guess, for the price of oil that it is on this particular index that I use. Now, just a disclaimer, this is the one I'm able to trade with my broker. Some people can trade US oil directly, as you see right here. Even though the price seems different, these charts are exactly the same. So watch, I'll flip over to US oil and I'll switch it to the 4-hour. Right, and you see that this candle pattern setup along with XTI is the exact same thing. Okay, so it doesn't really matter what you trade. This is what it's going to look like. But anyway, so my trade idea is going to be something like this. All right, and this I believe is going to. Oh no, what did I just do? Well, I put the green R up there, so that's fine. Okay, so this is what I believe is going to happen. This is more of a long-term play. I would say might take a few weeks to maybe a month and a half to play out, but this is what I see happening. Okay, very good potential, almost 16-to-1 trade on this if you set your stop loss all the way to the bottom of that wick. Now, the only thing that would concern me is this red point of control that we have all the way from the climb here before it's spiked upwards. Okay, so it's already fulfilled its retracement. It is possible that it is going to hit this point of control. The only thing that kind of steers me away from that is how hard it rejected and made that new institutional, right? So you can see right here on the 4-hour what it looks like. And I'll flip it over to the 2-hour just for a second, right? The exact same candle downwards is what formed there. Okay, so what kind of goes to show me is that even on the 1-hour, you can see that's the complete move. So this is why I'm saying I would probably base my trades off of that. Simply because usual rejection off those time frames is a good sign that it wants to climb higher. But again, this, as you can see, this was the beautiful play off the institutional that was formed way back here. So as you can see, I left it up, right? And let me show you what this looks like there. It's not on the 1-hour, it's going to be on the 4. All right, look at this bad boy. Right there, perfect move off of that. Okay, so the only reason why I think it's not going to pull all the way down, as you can see the prior movement that happened here kind of went up and down and just off the top of that wick before it continued to climb. Okay, so the way that this is setting up, it could be possible that it only bounces off of this area. I'll just draw it up somewhere around here. Okay, so what I'm going to do is kind of gauge to see any smaller time frames if there's anything within these wicks right there. And so far, nothing that I can tell. All the play is going to be in this area. So yeah, that is what I see on oil in the long term. Actually, looks pretty good. Even as it is now, I'd be thinking about taking a buy because it just switched, like the EMA's crossed on the 4-hour just now, and typically on oil when they cross they tend to move for several days in that direction, right? It's been a little volatile over the last few days, but if you take into account, let's say, we'll zoom all the way over here and you see EMA shift goes all the way down, EMA shift goes all the way up, right? And these typical movements after they shift on EMAs right before they cross again, it's about 13,000 pips that it moves up, or 1,370. I think the extra digit is just kind of the dollar amount, right? But anyway, $13.70 is what oil moved. So whatever you trade on that, right? So that was the move upwards, and then you can see it shuffled down, so it shifted EMAs on this candle right here. So unfortunately, taking 3.5 is too big for me of a stop loss. But look, it went all the way down to there before switching up here. So still in profit, but kept going, right? So it really only does these kind of wonky shifts when it's in consolidation. Otherwise, when it's moving pretty well, it's going to be something quite stable, except for, as you see, like this is a small consolidated climb, right? But if we switch it to a higher time frame, like the 6 hour, for example, even better, right? Like look at that split coming up. And even as it's climbing down here, it's rejecting off of an EMA line, right? So I would say, as far as it's looking right now, because watch this drop, right? I'll switch back to the 4 hour. As it was dropping from here, look, it didn't cross here. It almost did, right? But it kept going, finally shifted, right? So even after an EMA shift, before it crossed up again, would have been right there. That is a 1,200 pip gain, okay? Now, from where it crossed up here, to where it crossed again, so that would be a 240 pip gain. Not huge, but it's still, EMA shifts, and it is possible to grab that. Look, EMA shifted basically on this candle, so we'll grab it at the bottom of this one before it shifted once more. So I mean, that's only a 45 pip gain, but it dropped almost 500, right? And now look, another EMA shift on this candle, right? Quite a large candle due on the 4 hour, right? So as that's happening, I may have seen what the smaller ones look like, but EMA already shifted here, so that would have been a pretty good sign. 4 hours, the safe bet, right? So shifted here, look, could have easily grabbed another almost 800 pips going down, but it shifted up and it would have been nearly at a break even, right? Based on that movement. And then again, shifted up. This is the only kind of wonky trade I would not have grabbed. Because as you see, there were several times it rejected off that pink EMA. I mean, this one crossed through, but it went back down. This one rejected off the white. This one rejected off the pink, right? So as soon as it kind of comes up to that area, I'm weary of taking any buys. Right? I'd be looking more for sells, for rejections, except for where we're coming up here. So like I said, EMA just shifted right there. Potential trade. Even to take up to the pink, that'll be about 307 pips before it does a rejection, maybe about 250 even. So it's still a pretty decent buy to snag as the entry would be at open, but I'd be more concerned about it actually pulling back here and rejecting. If that rejection happens, that EMA shift that follows, that's going to be the golden ticket. Okay, so this is just the trade idea setup. Like I said, the majority of Forex currency pairs, I look for EMA shifts on the 4 hour. Okay, so that was XTI USD or US oil. Now let me jump into AUD USD. I would say oil for the most part would be my favorite one to go through right now. Okay, but as we are here, I'm going to get rid of my drawings. All 17 drawings. There we go. All right. And as I see happening here, this is a very good sign that AUD USD wants to keep dropping. Okay. Every single time it reaches that pink EMA, which is 55, it goes down. Right. It barely closes above it before shooting all the way down. The only possible reason that it could move up is because of U.S. data coming out in the last few days and upcoming weeks, right? So what I'm going to do is open, let's see, I'm going to open new window, and we'll go Forex Factory. All right, so let's take a look at the upcoming news. So Sunday, AUD monetary policy meeting, so that's going to be volatile for AUD. AUD, again, low speaks, GBP, CAD, JPY, Really not much for USD going on that's going to impact the real estate market, so not really on Forex. USD right here, manufacturing, unemployment claims, and AUD not a whole lot going on, right? USD right here, flash services PMI, so not really impactful for our particular currency. And that's really it for the week, right? So we're looking at very tame news for AUD and USD. So I believe that it's just going to continue following this trajectory. But at the same time, I don't really see it going too far down because we're kind of poised for a little bit of a pullback, right? So if we take our fib extension and, for example, we'll use it from this point here to the next low that we had, right? So lower high, lowest, and then higher or lower high from there. As you can see, we're kind of in reversal territory now. And as far as it's going to reverse, I predict that it might just hit this white EMA line before it drops lower. Good example would be if we take a fib retracement from the last kind of spike upwards there, it kind of shows that that's exactly where it's going to go, right? So if it is a buy that you're looking for, it's going to be a short-lived one, maybe 130 pips before it drops further, okay? It was looking pretty interesting, but I'm second guessing myself the more I dive into this pair. So I'm going to leave this alone for now, because if both currencies are strong and they have no relative news coming out besides, a Fed chair speaking for a little while, just going to make the currency volatile for maybe 15 minutes, and then it's going to continue on its path. Okay, so let's jump in on Euro JPY. And we see here right now we had a triple top off the 4-hour. Okay, and that was beautiful actually, because the trade to take would have been off of this one right here, or if it pulled back once more, which it did, and it didn't break a previous high. So if there was any trades taken off of here, would have been perfect, or even just after that candle closed. Set a reasonable stop loss at about 40 pips. And I mentioned before that my stop loss is around 40 to 50, depending on which currency pair it is and how it's moving. Very seldomly do I take snipes of about 20 pips or less. I find that they break stop loss more often than not. So 40 pips is pretty safe for me, as what I've seen. But anyway, if you jumped in at that point right there, it could have been a beautiful 650 pip gain, and it bounced right off the brown EMA, which is the 610. And if you see before, exactly the same sort of area. It hit off that 610, went up. Look, it hit off the 610 with a double bottom, and now it's going up, right? So the only thing that I'm thinking is going to happen here, JPY, if they have any news, so let's backtrack here, okay? So we will jump into, let's see what's happening. So bank holiday, JPY, let's see if there's going to be any news. Nothing. JPY, BOJ outlook report. How significant is this? More hawkish than expected is good for currency. So it's a report is a report. That's wonderful. BOJ, I don't, Bank of Japan, right? Sorry, I should have figured that out. Anyway, that's kind of their prediction going forward, right? Monetary policy statement, Bank of Japan release again. And what does this actually do? Let's see. Among the primary tools the BOJ uses to communicate with investors and monetary policy, contains the outcome of their decision on asset purchases and commentary about the economic conditions that influence their decision. Most importantly, it projects the economic outlook and offers clues on the outcome of future votes. Okay, wonderful. So again, it's just projections, right? Let's move on. Do we see any other news for Euro? ECB, which is European Central Bank, wonderful. So just more talking right here for JPY. Main refinancing rate, right? So Euro hasn't really been increasing at all to combat inflation, but they are forecasted to finally increase their rates here, right? So that would definitely pose a specific move for the currency. Typically, when interest rates increase, the value of the currency goes up. So as this is happening right now, I think that's what they're pricing in with this currency, right? So when it actually gets priced in, that's when we're going to see a little bit of, big wicks for the day, and then it's going to continue on its path, right? So I believe that Euro JPY is going to be headed back to here, back to this area. I do not believe it's going to be making a fourth top. We might be seeing a rejection even as low as here, right? To this candle pattern that we had. It was just a supply zone that got hit and then shot straight down, right? So to take a buy on this, would seem pretty logical, especially with how it's been climbing. So setting stop loss around, just at the bottom of the red EMA or below the pink would be pretty good. So 60 pips is reasonable. And to take it about 242 up. So a 4-to-1 ratio for a short-term trade doesn't seem like a bad outlook. Okay. And look, German flash manufacturing, no JPY news until far, far away. Yeah, so really nothing coming up from Euro JPY otherwise, which would mean that it's going to be a pretty stable currency to take trades on, right? We only have that one day to look forward to for news. After that, once the currency stabilizes, it would be a very good time to pop in. But anyway, I'll leave this trade idea up. It is possible that we're just going to hit there and reject. Okay, so that's one. And Euro USD. So we saw how everything was moving. Now, this didn't pull up as high as I expected, but it sure went down, right? So much for that, right? We'll just get rid of my drawings there. All right, and for future projections, as we saw, this spiked further down, right? So we can add to our Elliott wave. And let me just click on the tool. There we go. So from there, then there, then would that count? Yeah, that's a little lower than there, then there. Let's see, is it lower? Just got to make sure, otherwise it's invalidated, right? So let's see, take the crosshairs. Oh, it is not lower, it is higher. All right, so what we're going to do is just scrap that, draw the new one, which is going from here to there. Okay, so there we go. We've moved another wave down. So it's been going quite a bit already. Like we haven't had any, like you can see it goes on for a while, right? Since all the way back in January where it started to crash. So we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. That's a lot of waves. Like this needs to pull up eventually, right? Like it's just been getting crushed. It dropped how much? 20 something percent since January, right? For value. So where we're at right now, yeah, almost 20%. All right, so with all those waves coming down, what I predict will happen because of what's been happening in the past already is every sort of wave that comes up, watch this, okay? So we'll use the most recent ones. We'll take the Fibonacci and we'll go from the high here to the low right here. And now look at retracement area, okay? Where it's consolidating right on the 618. And watch, I'll draw volume profile just in its consolidation zone right here. Imagine that, point of control exactly on the 618, okay? So there goes that. Now, what do we have here? Once it started dropping, right, from that area of control, so this is the highest point from there to the lowest. Look, it almost came up to the 618 once more, right? And where is the volume in this consolidation area? Probably right between the 328 and the 50%. Yeah, here we are, right? So you see it coming up, and then it finally broke through there. And once that happened, there's going to be one more pullback into its previous zone before it drops even further. Okay, so as you see, this is moving at a very stable rate. Okay, the last 2 times it did proper fib retracements, and now where we're at right now, when we take here and bounce it all the way down, this is the potential zone for retracement before dropping further. Okay, so and look, on top of that, we have a large imbalance right here that needs to be filled. So we'll drop that to the 1 hour and see what that actually looks like. Yeah, 2 big red candles. So this is going to be a 2-hour play. Look at that. Okay, so here we go. This is going to be a nice setup. I'm not even going to have to worry about guessing the area or waiting for EMA switch on this particular guy. This is what I'm going to be looking for. Now we have our zone. Now I'll tighten the zone a little bit. I'll draw my white ray coming right in the middle of this imbalance. Okay, and a short position taken right from there. How high will this be? 60 pips? Okay, that's still reasonable. It's still within my range. Possible might be able to get a little bit tighter, but this is the safe bet right now, like I said. And then aim to go lower, but right now just to make its previous low. So already this is going to be looking like a 7-to-1 trade at a minimum. Okay, that is very, very possible. It's going to be pulling up in the next little while because, as we've seen, USD doesn't even have much news coming out until, I believe, the 25th. So let's take a look. USD right here. So yeah, just unemployment claims that we saw before. Oh, what was this one? I missed. Shoot. That's a whole week. Okay, whatever. I'll just zoom to the bottom here. Core PCI price index. Okay, so what does that mean? Let's see. Bureau of Economic Analysis. It's Federal Reserve's primary inflation measure. Yeah, okay, so we know that inflation is still going to be increasing, so that's not a surprise. But anyway, July 29th, that is when that is going to come out, so that's already 2 weeks from now. All right, we'll just pop in to see if anything is this week coming up. So let's see, USD, just that on the 21st. Nothing significant. Housing, nope. Nope. Right here, it's already been released. Yeah, so we don't have any significant information coming up until CPI on the 29th. I thought that 25th, actually, we were supposed to be getting, let me just double check one more time. I thought the 25th we were supposed to be getting news release, but no, there's nothing. CB consumer confidence doesn't really mean a whole lot right now. That's going to be more for stocks than it is for Forex. Right here, federal funds rate. So that's on the 27th, actually. So there we go. For what's the forecast? It doesn't say right now, but previous forecast was 0.5% to go up. It actually went up 0.75%. So that's going to be the big guy to watch for right now on July 27th. And seeing as it's July 16th right now, that leaves us 11 days to be able to close a gap of about 300 pips before dropping hard. So one of two things. You can wait until it hits that trade idea right there. You can risk a buy to get to that trade idea. Personally, I don't want to go counter trend trades, right? So everything's pointing down. This is just a bit of a counter trend. And yeah, that may not be a good idea to take on the short term just because of what we've seen already going on, right? Like there's going to be a lot of volatility on the climb, but once it hits this area, I believe that it's going to drop hard. Okay, so that is my analysis for the currency pairs for the week. I hope that it's been helpful. Please send a comment if there's any other pairs that you'd want me to dive into. But Euro USD right now seems to be, besides oil, actually, I really like oil and how this is set up. Right, like I'm pretty excited to see that play out. But besides oil, Euro USD would be my pair of choice. Okay, so anyway, thank you for watching, and I'll catch you next week.